10,000. So if you've already, let's say you pass your challenge, right? That means you're able to make $3,000. So with the funding challenge being the cost being $89, you're basically flipping $89 to 3,000, and that's
Yeah.
basically what a funding challenge is. Now, the funding challenge people, some people have issues with funding challenges. Some people don't. I do funding challenges, but there's another option which is the live account. Live account's a lot more dangerous because like if you don't know what you're doing, then like you're probably going to lose money. Like because when you start an account, it's good to start your account with like 1,000 or 2,000. But if you start an account and lose it, then you just lost 2,000. But when it come down to a funding account, you can literally buy like almost 40 funding accounts before you're at the $2,000 mark for spending money. So that's why I
Yeah.
recommend the funding account for beginners. The most important candle for breakouts. Now, what is a breakout? Now we trade support and resistance. Okay, so whenever we're having a breakout, we're breaking through a resistance or we're breaking through a support. Let's just use the example. Let's use the example of breaking through resistance. So we're going to break through resistance and we're going to basically aim to find a new level of resistance. We're not taking a break and retest where you're breaking through resistance, coming back to that new found support, which used to be resistance, and then taking the trade off of it. No, in this case, we're basically just going to be, if we're looking to break through resistance, we're looking to just go higher. Okay, so that's what a breakout is. If it's still not making sense, pay attention to the charts. That's where it's going to make the most sense. Okay, so as you can see, overall trend it's pretty bearish. Not gonna lie, like we were way up here and now we're over here. Okay, so there were some lower lows, some really lows that were made, but in current day, we're starting to come back up. And as you can see, boom, we're at support, a lower high. Okay, that's a low. Boom, 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 boom. Okay, so now we're going up. As you can see, look right here. Um, this area right here. Boom, that's the breaker structure. Boom, another breaker structure. Boom, another breaker structure. So there are highs being made even though we're still technically in a downtrend. So in this case, I feel like it's very okay to look for buys in this instance, even though we're in a downtrend because highs are being made. Okay, so let's get off of this. Now we're on the hour time frame. Okay, so let's just give a little overall breakdown. Now we're in an overall time frame. So as you can see, this 7 a.m. candlestick pushed right through this lower time frame resistance. Boom, it literally pushed through that. Now we have this candlestick right here. The next candlestick, this is like the 930 open candlestick, literally pushed up. Okay, so at that point, we're looking like we're going up because we're making new highs. So let's go to the 30-minute just to check to make sure. Okay, 30-minute. So as you can see, we have us a variation candle formation right there. Now, if you don't know what a variation candle is, we're about to go over that in the next video. Or if you want to DM me and do a one-on-one, this is something that I, kind of prioritize because these are the entries that I like to take. Okay, so we have a variation candlestick that moves the market up. Now we have this candlestick right here. This candlestick literally pushed lower, rejected, and now the buyers have found some more control. So at this point, it's basically telling me that the buyers want to go up because the sellers made an attempt to push the market lower, but the buyers stepped right back in. Okay, so 15 minute 15-minute, it's really saying the same thing as the hour time frame. The market's trying to push up higher. We do have a rejection right here, like I was in the 30-minute, but it looks a little better because you can see the body of this candlestick did not close lower than the wick of this candlestick, and then we have a long wick right here. So that's solid rejection. Okay. The only thing about this rejection is it's in the middle of nowhere. We're not looking to take trades in the middle of nowhere, but I'm going to show you how to capitalize on opportunities to take trades in the middle of nowhere. So, okay, 5 minutes. So let me get this off the screen. And this is what I like to do. I like to mark up the high. So at this point, if we were trading this day, right? What we would simply do is we would just mark up this level because this is going to be the current day high. And once we break above this level right here, all signs for buy are valid. Now, where are we going to take our buy? We're going to take our buy to our previous resistance. That's where we do our key levels. That's why we have our key levels because our key levels are going to be targets. Okay, so let's skip forward a little bit. And as you can see right here, it is a rejection right here. We have the market trying to push up, but you have this pin bar candlestick right there, which shows that the buyers, they're not really yet ready to go up. And that's why I don't take trades in the middle of zones because, at any point, the buyers could lose steam or the sellers could step in. You never know. But at zones, it's like more likely to be able to have your trade win. So let's skip one more. Okay, boom. So really just trying to shake people out, and basically it basically broke through this high, rejected this level. Let me just mark this out so you can see it better. So basically rejected this area right here, and I don't want to hear nothing about no fair value gap. I don't want to hear anything about that. We're not doing that, all right? All right, so let's go to the 3-minute because I like this candlestick right here. This is an engulfing after the sellers attempted to stop the buyers, but they did not push the market low. They did push the market low right here, but as you can see, the buyers stepped in pretty heavily. And what are we coming up to? Not only resistance, but we're coming up to a new high. So this is kind of going to be like a break of a high setup, but at the end of the day, I'm showing you a breakout candlestick formation, and this is a breakout setup as well because this is a break of a high. Okay, so you're breaking through and you're continuing. Okay. So let's go to the 3-minute because of this engulfing, and we're getting close to that high. And as you can see, this candlestick right here. Now, this is going to be a low probability variation because it's a 3 candlestick formation. Now, the thing I like about this the most is not only did we reject this area right here, we also rejected this area right here as well. So every time the sellers tried to step in, they literally push the market up. So let's just go over how the market actually looks. So boom, 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 boom. And then let's just leave that right there. And let me take the candlesticks off. Okay, so at the end of the day, this is how the market moves. And at this point, we are at a, what is that, a higher low? I'm sorry if I'm messing it up. I don't really do that too much anymore. But at this point, we're really looking for the market just to push up. And since we have resistance right here, basically the market to maybe bounce off resistance and then just eventually go higher. So it's very key that we find somewhere where we have a good entry. And at this point, we're going to be taking our entry once the high is going to be broken. Okay, so hopefully that makes sense. Let me put the candlesticks back on. Let me erase some of this stuff so it doesn't clutter too much. Boom, 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 boom. Okay, boom. Now let's go over how we capitalize on this. Okay, so when you see something like, okay, we got an engulfing right here. We have a candle that's similar to a pin bar, but it looks like the market wants to maybe push a little bit higher because as you can see with this wick right here, maybe the sellers try to step in, push the market lower, but the buyers remain controlled. Look at this strong close. What I would simply do is I would take my entry right here. Normally with our break of high setups, we want to see the market, the candlestick close above the high, but at this point, since I'm getting the candlestick that I like, basically I would take my entry and have my stop loss literally right here. Now I would wait for the next candlestick to open up, break past that, and then I would basically take it to this zone right here. So this is a 20-point move, and this is a 12-point stop loss. Now this stop loss is very big. I like my stop losses to be 4 points. If I'm not able to get 4 points, then I'm probably not taking a trade. So whenever you run into examples like this, what you want to do is once this next candlestick opens up, you want to wait for it to push lower a little bit, give you maybe like a, I won't say a safe stop loss, but it's going to give you like a area where your stop loss can be, instead of down here, it can be up here. And let's just put it at the 5 points. So now we're going to be aiming for a 1 to 4, or I'll personally say for break of a high setup, you do a 1 to 2. But let's just see what happens. So if the next candlestick opens up, pushes low, my stop loss will be underneath it. If it breaks past, I will enter the trade. So let's see, skip forward, boom. Okay, so at this point, my stop loss would be down here. That's pretty tight, I ain't gonna lie. Order flow would help me be able to get a better stop loss, but it's all good though. So my stop loss would be somewhere in this area. I would have waited for the market. I wouldn't have taken the trade as soon as it opened up because that means my stop loss would have been down here. I would have waited for the market to reverse a little bit, show me some rejection like it did right here. And then once it breaks up, then I'm looking to get into the trade. So let's go to the 5-minute because 3 minutes pretty stressful. And let's skip forward. Let's see if this TP gets hit. Okay, boom. TP hit just like that. And that is a break up a high setup, and that is going to be the most important candlestick formation for continuation, and that's going to be our low probability variation. It's going to be a 3 candlestick formation that basically shows you that the market wants to go up. Now, if you are having any issues when it comes down to trading, do me a favor. Follow me on Instagram and then DM me, and we can do a one-on-one so I can show you how to catch moves just like this. This is a it's a 1 to 2, but it's a 20-point move.